You're busy, you're turning down work, and you've started thinking, I just need to hire someone. But here's the question to think about. Can you really afford to? Hi, I'm Janie with Sturgeon Bookkeeping. Hiring your first employee or your next one is one of the biggest decisions you'll make as a business owner. And a lot of owners make it on a gut feeling. They feel slammed, so they hire. Then a few months later, they're wondering why the money got so tight. Here's the good news. You don't have to guess. The answer to can I afford to hire is already sitting in your numbers. You just have to know which ones to look at. And by the end of this video, you'll know exactly how to run that check for yourself. If you'd like to make this call with real numbers behind you, please subscribe. Now, before we dig in, let me show you the two reports we'll keep coming back to so you'll know exactly where to look. The first one is your profit and loss statement. Some people call it your P&L or your income statement. It's the same thing. At the very top is your revenue. That's all the money coming in from your customers, also called your sales. At the very bottom is your net profit. That's what's left over once your business counts everything it costs to earn that revenue. So revenue at the top, net profit at the bottom, same report. In between those two, there's usually a number called gross profit. We'll come back to exactly what that means in a minute, but for now, just know it's a stop along the way, not a separate report. The second report is your balance sheet. Think of it as a snapshot of what your business owns and what it owes. For today, the part we care about is what it tells you about your cash. So two reports, that's where all of this lives, and I'll point you back to them as we go. So let's meet Matt. Matt runs a small business. Things are going well, maybe too well. Matt is working nights, working weekends, and starting to turn away jobs because there just aren't enough hours in the day. So Matt does what many busy owners do. Matt thinks, I need another set of hands. I need to hire someone. And that feeling is completely understandable. But those two things, feeling busy and being able to afford someone, are different things to consider. Being busy tells you there's demand for your work. It does not tell you whether your business can carry the cost of another person. Those are different questions, and owners get into trouble when they let the first one answer the second. So the real question isn't, am I busy enough to hire? The real question is, do my numbers say I can carry this? And that's a question you answer on paper before you ever post the job listing. Let's start with the cost. It's almost certainly bigger than Matt thinks. When Matt thinks about hiring, Matt thinks about one number, the salary. I can pay someone $45,000 a year because I make more than that, so I'm fine. Honestly, that's a completely natural way to think about it. The salary is the number right in front of you. But there's a trap hiding in it. Some owners look at their P&L, see the net profit at the bottom of the report, and think they're good to go. Others look at their revenue at the top of that same report. I did $80,000 last month, so I can definitely cover one more person. Now, both are reasonable places to start, but remember, revenue at the top does not equal profit at the bottom, and neither one equals the cash in your bank account. They're easy numbers to reach for because they might be familiar to you. They just don't give you the complete picture of whether you can carry another person. So if the salary isn't the real answer, what is? Well, the salary is just the start. The number you put on the offer letter is not what that employee actually costs you. Don't forget, that paycheck is due every single pay period, whether you had a great month or a slow one. You can pay yourself less when money's tight, but an employee, you can't. That's a real shift in how your money works, and it's worth sitting with before you commit. Let's think about everything else that comes with a new person. They need tools or equipment, a computer or software. They might need space. And even a great hire needs time to learn how you do things before they're up to full speed, which means your time, the most valuable thing you've got, goes into getting them there instead of into your own paying work. And then there are the added costs of just having an employee on the books. Things like payroll taxes, workers' comp, unemployment insurance, and depending on what you offer, benefits. Sometimes owners forget these even exist until the bills show up. And some of them don't stop the moment the employee leaves. They can follow you afterward. Now, these depend on your situation and your state, so that's a conversation for your CPA. But you do need to know they're there, they're real, and they stack right on top of that salary. So when Matt says, I can afford a $45,000 employee, the truth is the real number is noticeably higher than $45,000. Now, not double, but enough that treating the salary as the whole cost is how owners get blindsided. And hiring an employee isn't your only option. Sometimes a contractor is the better answer, especially short term, because you're not taking in all the added costs and commitment that come with the employee. Just know there are rules about who actually counts as a contractor versus an employee. So that's one more conversation to check with your CPA before you decide. Keep it in the back of your mind because I need help and I need to hire an employee aren't always the same thing. So the first step is just to be honest about the real number. But even the real number isn't the whole story because there's a timing problem hiding underneath all of this. Here's the part that catches many owners off guard. That paycheck doesn't buy you productivity right away. It takes time for that new person to get trained, get up to speed, and start producing enough work to actually cover their own cost. The costs start on day one. The payoff usually doesn't. And that space in between is where good businesses get caught. So there's a gap, a stretch of weeks, sometimes months, where the new person is all cost and not yet enough return. Money's going out before the extra money is coming in. And remember, profit is not cash. Matt can be profitable on paper and still not have enough cash set aside to get through that gap. A profitable business that hires when cash is already tight can suddenly find itself really strapped, not because hiring was the wrong move, but because there wasn't enough cushion to make it through those first slow weeks. The question is not, can I afford the salary, but do I have enough cash to get through that ramp up period before this person can pay for themselves? If Matt has a healthy cash cushion, the gap is manageable. If Matt is already living month to month, hiring might be the thing that tips a good business into a cash crisis. Same hire, completely different outcome. And the only thing that tells you which one you're in is your numbers. An owner pours years into building something good, and then one hire made a little too early. It puts real strain on all of it, not because the person they hired wasn't the right fit, just because the timing was off by a few months. That part is really avoidable, and it's exactly what your numbers can help you see coming. So let's look at exactly which numbers give you the answer. Here's how Matt turns this from a gut feeling to a real decision. 2 checks. Check number 1, can the work this person does bring in more than they cost? If you're hiring someone to do the kind of work you charge customers for, that work needs to bring in enough to cover what that new person truly costs you. The real, fully loaded number, not just the salary. Now, this is where your P&L comes in. Partway down, there's a number called gross profit. It shows you what's left of your revenue after you subtract what it costs you to do the work. And that's exactly the number that answers our question. Are the sales this new hire brings in worth more than their fully loaded cost? Not just barely more. Look for real room here. Here's a quick way to test that. Ask yourself, if sales came in 20% lower than you were expecting during their first few months, would you still be glad you made the hire? If the answer is yes, you've got real room to work with. If it's close or the answer is no, that tells you something needs to change first. Maybe on your pricing, your efficiency, or maybe it's just not the right time yet. Check number 2. Do you have the cash cushion to get through the gap? This is where your balance sheet comes in. Your balance sheet is basically a snapshot of what your business owns and what it owes. And that includes your bank accounts, the money customers still owe you, and the bills and debts you all owe others. So if your books are current, it's a report that gives you the clearest picture of your cash situation, not just your checking balance. Now, your bank balance is a good starting point, but it can be a little misleading because some of that money may already be spoken for. Sales taxes you're holding, a big bill you know is about to come out, or money you've earmarked for something else. Subtract that out, and what's left is closer to your real, free and clear number, not just what happens to be sitting in the bank account today. What you're looking for is a buffer big enough to carry that new person through the ramp-up period, the weeks or months before they're producing enough to pay for themselves. As a starting point, aim for at least 3 months of their real, fully loaded costs set aside before you hire. A great hire might ramp up faster than that. This isn't a bet against them. It's your insurance in case it takes longer than you were hoping for. If the role takes longer to ramp up, more training, more complexity, lean towards more, not less. If your business is barely keeping ahead month to month, there's no cushion, and that probably means not yet. One more thing to think about, your balance sheet is a snapshot of a single day, and that single day can be misleading. Look right before a big estimated tax payment goes out and your balance looks great, but you know a chunk of that's already spoken for. Look right after you pay it and the balance looks tight, even though you just did exactly what you were supposed to do. Don't judge your cushion off one day. Watch it over 2 to 3 months and you'll see the real pattern, not just a snapshot. Put those 2 checks together and you get the real answer, and it's going to be one of 3. Yes, the work brings in more than it costs and I've got the cushion. No, the numbers don't support it yet. Or not yet, but now I know what has to be true before I can hire. Maybe you need 3 more months of cushion saved up. Maybe you need to raise your prices so the work brings in more. The numbers don't just answer the question, they tell you what to fix. That's the difference. Matt started with a feeling, I'm slammed, I need help. And Matt ended with a decision. Here's what my numbers say, and here's what has to be true before I hire. You don't need to guess at this. You don't need to become an accountant. You just need to look at the 2 things that actually matter. Whether the work brings in more than it costs, and whether your cash can carry you through the gap. And there's a reason you're able to answer a question like all of this. Books that are caught up and accurate give you numbers that you can actually trust. That's the difference accurate books make. The confidence to make this call and every other big call that comes after it. If you want an easy way to actually do that tracking, I built a free 1-page scorecard. It tracks what your work actually brings in and the cash you've got on hand, side by side, 3 months at a time. Exactly the window you need to see the real pattern instead of guessing off one snapshot. I'll drop it in the description below. So, before you make your next hiring decision, ask yourself 2 questions. Will the work bring in more than it costs? And does my business have the cash to get through the ramp up? If you can answer yes to both, you're ready. And either way, you're deciding with numbers, not with hope. So that's how you answer, can I afford to hire, without guessing. But hiring is just one of the big money decisions you'll face as an owner. Buying equipment, taking a draw, and taking on debt. They all come down to the same skill, reading what your numbers are actually telling you. And that's what this channel is about, and it's what we'll keep working on together. I'm Janie with Sturgeon Bookkeeping. Thank you so much for watching, and I'll see you in the next video.